Formerly one of the world's largest cryptocurrency exchange platforms, FTX, has filed for bankruptcy in the US, and the now former CEO, that is Sam Bankman-Fried, has stepped down. All of these comes after a liquidity crisis that has prompted intervention from regulators around the world. FTX had valued its assets between $10 to $50 billion. Its affiliated crypto trading fund, Alameda Research, and about 130 other companies have commenced voluntary Chapter 11 bankruptcy proceedings. The imploding cryptocurrency trading firm is now short of billions of dollars after experiencing the crypto equivalent of a bank run. It said there had been unauthorized access and that funds had disappeared. Social media speculation is rife with theories of whether the exchange was hacked or a company insider had stolen the funds, a possibility that cryptocurrency analysts couldn't rule out. So joining the conversation from Berlin, Germany is Olumide Adesina, financial market analyst at Quantum Economics. Olumide, thanks for joining us.
Yeah, thanks for having me. Good morning.
All right, now FTX was once valued in billions of dollars in terms of value, and it was one of the world's largest crypto platforms. What made it so popular before the fall?
Yeah, one should take into consideration that FTX, the Alien Crypto Exchange, had so much systemic importance in the crypto industry. Before it collapsed, it was valued at $32 billion, and it had millions of customers that used it for not just crypto trading, for some form of custody. And that was because of his strong alliance with Wall Street. You know, the founder was a trader at Jane Street, one of the most popular proprietary trading firms in the world. And he gained trust in the fact that he understood the financial mechanism of digital assets in relationship with traditional finance. But albeit, I think trouble started in May when he got pretty much overexposed with over leveraged bet and made him lose so much money on its trading firm, that's Alameda. And because of the relationship with FTX, they used allegedly used FTX funds to cover up for those mess. And with the market downturn, the dollar getting stronger, and the fact that we saw liquidity crunch, like you rightly said, we saw that their assets became more of liabilities than assets. So I think that's where the problem came in, and we saw black hole. So there was a Coindex article some weeks ago, and the CEO of Binance decided to sell some of his FTT holdings. These are tokens that were created by FTX. And the cascade came out because investors became alarmed that something must be wrong with the exchange. And to prove bookmakers right, there was a lot of what people call bank run, where people got withdrawals, and FTX could not match those deposits there. So they asked for help, and that's where the trouble started.
Now, you said that there were overexposures in terms of the company's activities at some point, and this collapse, as these particular activities have led to the collapse, which have happened. Of course, we had Terra, Three Arrows Capital, and of course a host of other industry-leading firms that have also imploded. Now, many are saying that there were red flags that were missed. Do you also agree that the industry actually missed some warning signs?
You see, it's very easy to spot on flaws when the damage is done, but you need to understand that this was someone that came in from the high aurora of traditional finance. It was very hard to raise suspicion. His parents were professors in Ivy schools. He was one of the largest donors of President Joe Biden's political campaign. In fact, he held regulators at sway, so he had that power because of the fact of his relationship and his antecedents. He was an MIT guy. He was a brilliant trader. You can't take that away from him. But you see, one of the highlights of the problem is that just like traditional finance, we could say corporate governance was weak. The fact that he did not have a CFO, the fact that power was concentrated at the hands of very few, the fact that we did not see proper audit, because you see, audits will have raised some of these things. There was no independent board of director committee. There was no oversight, and because the market was deeply unregulated, it left regulators at limbo of what was really going on. And that was why you could notice that the crypto market was expecting some rounds of crypto regulations, because we understand that in the financial industry, one of the easiest way to ruin a business's reputation, and that is what has just happened. The reputational damage from this crisis has weighed in on so many entities that reports have suggested that they've already started deleting or discontinuing their relationship with FTX. I'll give you a good example. Visa some days ago announced that they are ending their partnership with FTX in terms of issuing of debit card. Also, you could see that a number of venture capitals also had a high exposure in the exchange. So pretty much tells you that the corporate governance was weak. A lot of venture capitals were blinded. We took the media's shout about FTX just too much. We needed to have done our due diligence. So I think it's a blame for everybody, not just the entity, but I think it just tells you that when you're in the finance industry, nothing is safe until you do your own personal research.
Okay, Olumide. Now, customers actually fled the exchange over fears about whether FTX had sufficient capital, and it agreed to sell itself to rival crypto exchange, that is Binance. But the deal didn't go through at some point. So why did Binance pull out of the acquisition midway?
If you look at it, it wasn't really a pullout. If you look at the story of FTX, yes, FTX came out because they had a strong trading background. I told you the founder was a trader, and definitely people that saw future in it invested what we call seed round. Now, at some point, FTX was doing the things Binance was doing, so they felt that it was smart for them to end the relationship. So I think Binance cashed out over $2 billion, in form of equity, in form of the tokens that they kept, FTT and BUSD. So it wasn't the fact that everyone saw it coming. It was normal that when you get bigger, you want to reduce the systemic role your competitor was playing. And, FTX was looking more like going to take in the reins of Binance, because one of the advantages FTX had was that the founders were purely Americans. They had they had strong relationship with Wall Street, like I rightly mentioned, apart from Coinbase, and also the fact that institutional investors were very comfortable with the platform. But albeit it may, I think things went badly.
Thank you so much, Olumide, for joining the conversation. Of course, there are still questions whether this would have a huge effect on the crypto world as we see it, because it's a case one too many, a recurring decimal. But then we'll see what happens within the crypto world. Thank you so much, Olumide.
Thank you very much.
$477 million have been lost even as FTX has filed for bankruptcy. Will the customers be able to get their money back? Well, we get to consider what happens in the future as regards this latest developments affecting FTX. We will still be talking about crypto, but then we want to look at the future, what future it has for Africa in our next conversation. Do stay with us.